Another multifamily market update brought to you by the Multifamily Investment Advisors Group here at KW Commercial and KW1 Chicago. My name is Travis Montgomery. I'm the Director of Marketing here for the team, and powered and backed by KW Commercial and KW1 Chicago, which is the #1 real estate firm in the world, where we've achieved over $407 billion in sales volume just for 2020. And we're going to kick this off by passing it over to our executive director, Tony Hardy, to give us a little information about the market.
Awesome. Yeah, thanks, Travis, for that. Thanks guys for joining us again for Multifamily Monday update. If it's noon Monday, the Multifamily Investment Advisors will be working to bring you information to help you make the most informed investment decisions. I'm going to share a couple of slides, Cody and guys, on the overall marketplace, and we are streaming.
Oh, awesome.
Only me. I'm gonna go public. Title. Here we go. So if it is Monday, and it is noon, the Multifamily Investment Advisors will be bringing you a update on market conditions, on reports, and what we're seeing out there in the marketplace. And today I'm going to share a few slides with you about what we're seeing in the general overall market to kind of put things in perspective as to where we see the market heading, where we see the market at, because it's a lot of bad press out there, especially when it comes to Chicago, with eviction moratoriums and housing providers and other people being bad actors. But really, when we drill down to it, the fundamentals in the marketplace is still there, and the overall marketplace is growing. But there's a couple other things that come into play when we're looking at this. One of the things that we're seeing is that we're looking at tracking interest rates or mortgage rates. When we track mortgage rates, even all the way back to 1972, what we're seeing is that people are getting interest rates at like 3.11, 2.5. I heard a 2.35 on a 30-year fix. But even in multifamily investment properties, we just closed a deal at 3.25 on a 10-year fixed mortgage with 30-year AM. What this is definitely, it gives buyers of homes a little bit more purchase power, right? If you're qualified for a $200,000 loan at a normal, let's say 6% interest rate or 5% interest rate, and then interest rates drop down to 3 or 2, the amount, your dollar goes a lot further, and that helps to stabilize the market. Could you imagine being a real estate broker selling properties in 1979, 1980, when the average real estate interest rate was 16, almost 17%, and having to get out there and overcome those objections? Well, the reality of it is deals were still getting done and properties were still trading. But now there is a correlation between cap rates and mortgage rates. So that's something to keep bear in mind. When you look at the historical average since 1972 to 1920, the average interest rate was 7.91%, right? And then if you just look at the 20-year average from 90 to 20, the average interest rate was 6%, right? You tell somebody you're going to give them a 6% interest rate right now, they might throw their shoe at you. But that's not a crazy rate. right? And as we've seen, home prices kind of go up as interest rates have went down, and they have fell substantially just since February of last year to where we are now at about a 2.68%. So looking at home prices since 1989 till 2020, the average home price, again, investment in real estate, it's always a good time to buy real estate. And when it was a good time to buy real estate, always 5 years ago or 10 years ago. If you made that investment 5 years ago or 10 years ago, regardless of where the market was, it looks like it was a great investment. Even over the previous peak was 2006, right? At and we're substantially over that now with an average price of 317,000 when the peak was 220,000 just some years ago. We look at annual appreciation. There hasn't been very many times in history. We're going back to 1989 where we got an annual appreciation this high. We did see good appreciation in 2013 of 11.5% and 2005 of 12.2%. But 2020 is in the top three over the last 20 plus years, last 2 decades, in the top three of average appreciation of home values. And that tide rises all of the ships. And a part of that is the affordability component that comes with the lower interest rates. Another thing is we keep hearing investors and fix and flippers saying, hey, there's no inventory. There's nothing for me to pick from. And this is the lowest time on record of distressed sales. Less than 1% of the deals done over the last few months were distressed properties. Less than 2% in the last 12 months are distressed sales or foreclosures or short sales. Banks are working it out. Interest rates are lower, and people are able to come to terms with the different programs and the stimulus packages to get things in order. So investors that are looking for the value add, the deep value add properties to bring back on market, be it multifamily or what have you, are having to think outside of the box a little bit to find different ways to get in. There's still opportunities out there, but that opportunity a lot of times isn't coming in a pretty box with full paper and a bow on top. You're having to do a little bit more digging to get to that opportunity. Again, new home starts. We're still seeing demand outpace, and we still have an affordable housing crisis in the city and in the country, and the demand is there for continued growth in our sector, particularly multifamily. We're seeing a little bit of a musical chairs, if you will, with the investors that we're dealing with. We're seeing a little bit of a musical chairs with some of the lenders that we're dealing with. And this bodes well for brokers and investors and lenders that are able to get out there and kind of weed through the forest and think outside of the box to help investors to make the most informed decisions. I want to turn it back over to you, Travis, and let's continue the conversation.
Thanks, Tony, for all that great information regarding mortgages and especially information regarding the Chicago real estate market. And it's interesting that you touched on new developments or new opportunities that are coming on the market. I know Jason has been seeing a couple of new developments that's happening in Chicago. How about you go over a little bit of those, Jason?
Absolutely. Thanks, Travis. So yeah, in terms of developments, it's interesting. Tony kind of touched on a little bit. We sometimes hear about the bad press that's going on here in the city, but it seems like every week we can kind of highlight and point out a new development project that is taking place along the north side of Chicago. One of those developments being 949 West Dakin, which is a 120 unit redevelopment project that's actually replacing a single tenant Ace Hardware retail space, which is a trend that we are seeing. In this new development, it's actually going to provide some retail space, about 13,000 square feet of retail space where that Ace Hardware can actually utilize some of that space. So you're not losing that retail component, but you're just, adding on another 120 units of residential living on top of that as well. So that's something that's happening on the north side, but despite the fact that north side development haven't really slowed down, we haven't seen a slowdown in that. We are starting to see some of those developments on the neighborhoods along the south side of Chicago actually start to gain some momentum and traction with developments. And they're not small developments, they're actually large billion-dollar developments like the Michael Reese project and the Obama Center and things like that. So those are very exciting for the south side of Chicago as well. And on top of that, we're actually seeing a bit of cross product type developments that's actually starting to spur, residential development as well. So if we look at some of the west side neighborhoods like the medical district, as some of those facilities start to, finish up and start to come to life, with Rush University and things like that, we're seeing companies like the Marquette companies, start to plan 400 units in the area, as well as, redeveloping about 272 units of old, rental space that, wasn't really being utilized. So a lot of developments and a lot of exciting stuff happening throughout the city. And those are just a couple key projects that are taking place right now.
Definitely some exciting news regarding those developments in the Illinois Medical District and on the south side of Chicago. So I know we have some investors that are actually coming into the Chicago market over here. And when an investor comes into the Chicago market or just the Illinois market in general, Vince, how about you give us some information on what exactly that they're looking for when they're trying to acquire different multifamily assets?
That's an interesting question. Clearly, we have multifamily investors with obviously different acquisition criteria. So there's a range. Some of the appealing aspects of Chicago that we do see, I want to highlight would be initially the entry price for your average home sale is lower than that of other large metro areas. With New York having an average sale price of $1 million and LA having an average price of $500K, Chicago comes in just above $300K, according to a study done in February. So there's a lot of room for growth. There's a lot of meat on the bone, so to speak, for the investment population. 50% of the population in the Chicago metro area are renters. That is a high for a top 10 population city. This leaves a lot of meat on the bone again for multifamily investors. Clearly, we see that Chicago is home to 36 Fortune 500 companies' headquarters within the MSE of Chicago. So obviously there are some points of suspicion, as Tony mentioned. You'll see crime reports, you'll see the decline in population, but we do see obviously the investor confidence coming into the area, as noted by the landmarks developments that Jason indicated, as indicated by the groundbreaking of the Obama Library, which will occur this summer following the completion of the federal review in December. So we see a lot of perks in Chicago. It's still definitely the third largest metro area as far as GDP goes, with an all-time high price per unit projected within 2022. So that definitely shows signs of recovery from this pandemic effect as well. So we're definitely seeing a lot of investors looking at Chicago as opposed to some of these coastal territories with more room for growth. There's still developments that they can do in order to add a lot of value. And that's kind of where Chicago's going to stand out.
Thanks, Vince. And it's interesting that you mentioned how to actually add value to a multifamily asset. So if I was a current investor in Chicago right now, there's a great program, the ADU pilot program. I want Cody to actually handle that information about how we can actually utilize that program, maybe to add a little bit of value to the assets that we already currently own if we're an investor in Chicago.
Yeah, absolutely. Just real quick, everybody can hear me, right? I'm coming in crystal clear.
Yeah, Cody.
Okay, awesome. Yeah, there's 5 new ADU pilot zones that the Chicago has finally approved, giving both conforming and non-conforming units a chance to become a legal unit. There are some restrictions as far as doing more than 6 units. You're going to have 2 of them to be affordable, right? And affordable is defined at 60% of area median income. But that's not really that big of an issue because you're usually only adding 2 units anyway. In most 2 to 6 units. The ADU pilot program as it stands right now is an awesome way to force appreciation in your assets, add a little bit more cash flow, thus returning the overall value of the asset. I don't want to get too bogged down with ADU requirements and rules and whatnot. But I will say that non-conforming units do need to meet the new conforming standards, like 2 egress points and ceiling heights and things of that nature. But if you have any questions about ADUs specifically, definitely reach out to me, Cody at kwcommercial.com. I'd be happy to walk you through it, anything that I know, and get you set up so you can start earning a little bit more revenue from your asset.
Really quick,
Hey.
let me jump in. So thanks for that, Cody. Thanks for sharing that. The intent of the ADU pilot zone is to increase naturally recurring affordable housing. Yes, you can go in if you're in those pilot zones and apply to put a coach house in the rear of your apartment. But also these basement units, it can encourage you to add basement units around your building. And then they do have a requirement if you're adding 2 or more units, if you got a large apartment building and you're able to add 6, they want 50% of those to be affordable. However, what we find is that if you're adding garden units, they're typically naturally recurring affordable housing anyway, because you typically rent garden units out for a little bit less than the units upstairs and some of the other units around the city in the neighborhood. So it shouldn't be too much of a requirement, but we do welcome that as an opportunity to see if there's an opportunity to force appreciation in your assets, or see if there's an impact that these ordinances and these things have impacted the value of your asset just by being there. So I want to turn it back over to you, Travis. I just wanted to do a little bit of redirection on that.
Thanks, Tony, for that additional information regarding the ADU program. So I know Jason touched on some great developments that are coming to the south side of Chicago and Illinois Medical District and the north side. Cody touched on the ADU pilot program. I know at the Multifamily Investment Advisors Group here, we have a few opportunities that are actually by some of those new and upcoming developments and actually in those ADU pilot programs. Mo, how about you give us a few of those opportunities that we have over here?
Yeah, thanks, Travis. I would love to. The Multifamily Investment Advisors are pleased to present 3110 West Lindale, a 4-unit in the Logan Square area. That also sits in the ADU zone. Thanks, Cody and Tony, for sharing that information about the ADU zones. This property is fully occupied, and the second floor units are actually duplexed up into the attic already. With that being said, there is room to add some value and duplex the first floor units down, which will increase the rents by $500. This is also a great opportunity to work, a great opportunity for anyone looking to house hack, or with the potential for the potential buyer to occupy 1 unit and rent out the others to cover the expenses. Furthermore, we have a turnkey 6-unit in the Cal Park area. This property has benefited from many capital improvements over the years, including a boiler, some unit upgrades, some exterior structural updates. And you can get into this property under $400,000 and walk away with an 8.25% cap rate from day one. Last but not least, we have a 100-unit portfolio of single-family homes and 2- and 3-unit buildings throughout the south side of Chicago. Properties are cash flowing and would be a great opportunity for investors during this time. I know Tony mentioned earlier when sharing some of his findings, there's no foreclosures on the market and there's little distressed sales on the market. I think this 100-unit portfolio will be a great opportunity for any investors looking for opportunities where they can't find any on the market. All the properties presented to you today are off-market opportunities, and we look forward to being a resource to you, all the active buyers and sellers in the marketplace. And if you have any additional questions or comments or concerns in regards to the properties presented, feel free to reach out. And thank you, Travis. I'll hand it back.
Thanks for sharing that, Mo. One of the things I'll add is that some people don't realize how large of a company Keller Williams is, Keller Williams Commercial. Just to put it in perspective, in 2020, Keller Williams closed $407 billion. Year before that, 2019, it was $351 billion. That's more than $1 billion a day in closed sales. We try to bring inventory just to kind of give you a sample of a variety. But in reality, we need to sit down with investors to understand help to plan out an investment strategy, to figure out what the investment criteria are, what their exit strategies are, so that we can get the small percentage of our inventory in front of you and try to, even if we need to go knock on doors to do that. We're in 5 different continents. Not to mention, we have commercial advisors at 600 office locations around the United States. Just to put that in perspective. I want to turn it back over to Travis, and looks like we're wrapping up.
Thanks, Tony and Mo, for going over those available opportunities here at Multifamily Investment Advisors Group. Definitely great information. And like Tony mentioned earlier, a lot of realtors and a lot of brokers are saying they're not seeing a lot of inventory on the market. Well, here at KW Commercial, we have the inventory and we have the opportunities to get in front of these investors, to have these conversations with them as well. And once again, if it's always noon on Monday, we'll be here going over current developments, any programs that might be affecting the landlord or tenant ownership here in Chicago, and always opportunities that we're glad to get in front of all these investors. You all have a great day. Thanks for tuning in.